irrespective of the objective of that activity. If it is in the nature of trade, commerce, or manufacture, it becomes business. So you will have to remember three keywords: trade, commerce, manufacture. In whatever manner it is, it will be called as a business. So that is section 2. So you will have to remember three. Now we have understood the first term, business. So we should move on to which term? We should move on to profession. So when we talk about this profession, the first thing that I would like to tell you is profession is actually not defined in the Act. When you say defined, it is not clearly defined, which means it doesn't say that these are all professions or something. Like it doesn't have a definition like your business. Like the clause 13 discusses about business, similar definition is not there in a profession. But there is a clause which says something about profession, that is clause 36. Before we get into that, we'll discuss about a section which has a more clear definition or more clear, what you can say, more clear identity. It gives an identity to what profession is all about. That is section 44AA. Section 44AA tells you what all can be called as profession in the angle of Income Tax Act. So we said business must have one of the elements, that is either trade, commerce, or manufacture, right? So now profession does not have such elements or something of that kind, but it says these activities, these nature of businesses could be called as profession. What has been listed in 44A is legal, medical, your engineering, architectural profession, profession of accountancy, and that's what we belong to, right? Chartered accountants belong to profession of accountancy. So the technical consultancy or even interior decorator. So these are the list of list of business that has been classified as profession in accordance with section 44AA. Now, we said profession has not been defined in that, but there is kind of definition. So when I said section 2, I said it's a definition section. Section 36 talks something about profession. So clause 36 talks something about profession. So it says profession includes vocation. So this is the definition that has been provided in clause 36. Can we even call it a definition? I'm not sure, right? So because this is the only line that is there, it says profession includes vocation. So that's all there is there in the what you call in section 2. So what do you mean by vocation? So we have to just have a general understanding, probably a English definition, the English dictionary understanding of what the term vocation is about. Vocation is something which is probably not a proper skilled form, but there is a kind of skill involved. So it's this is how I could explain it. So probably we'll take it with some terms, more of art forms. Let's say painting. Okay, so painting, it is a skill, it is an art, but probably you need not have a formal education to learn painting, right? You can always learn it. So it's not something like a chartered accountant or doctor, where you definitely need a proper formal form of education to be a chartered accountant, to be a doctor, to be an engineer. But when you talk about things like your painting, astrology, sculptor, being a sculptor, right? So one who one who makes a statue, right? So those sculptors, painter, or writers, that is authors, are actually not, there is no formal education required. Like I can be a writer, you can be a writer. I can be a painter, you can be a painter. There need not be necessarily a formal form of education. So that's what you call with the term vocation. So since that is also skill sets, a trained skill set, you cannot become a painter without training, right? So you need some skill set involved. So that kind of training, that kind of skill set is also profession. So profession includes vocation. So what does vocation mean? Certain forms such as painter, sculptor, your author, astrologer, all these are categories of vocations. So if we combine all these, the profession and the vocation will fall under the category of profession. And then you have business, right? So you have business, profession, and vocation. Vocation's profession also includes vocation. So now profession is combination of section 44AA and section 2 clause 36. That's what profession is all about. Clear? So this is what it is about. Now there are a few more things that we should understand when we are talking about these terms business and profession. The first thing is business, profession, vocation is the difference between this is only the terms. What is business? What is profession? What is vocation? Just to understand what they are. But when it comes to taxation, everything is treated and taxed alike. For example, if you are talking about allowance and disallowances in business section, that is what is allowed as an expenditure, what is treated as an income. It is common. It is common between business, profession, occasion. So there is no differentiation between these three in in understanding or in taxing a particular income or expenditure. So that's what it says. Business, profession, occasion are all treated and taxed alike. Treated and taxed alike. So that's what we are talking about. And then in general, so that's what we said, taxed alike. And then what we are trying to say is in general, okay, in general. When you say in general, typically, a business or a profession, whatever it is about, it must be a continuous activity. Can I say, I will be a chartered accountant only on one particular day in 1 year. Rest of the days, I will not be a chartered accountant. Can I do that when it comes to opening up a practice? Can I say I will be practicing only during these 2 days? Can I do this? So typically, or not just profession, any kind of activity, even a business. Let's take any manufacturer. Can they say that they will only manufacture twice in a day? Rest of the day they are shut down. Can we do that? No. So typically, a business activity is continuous activity. There might be breaks in between, but the activity is continuous. There will be manufacturing, there will be selling. Manufacture might be periodical, but selling will be continuous, right? So typically, the point here is it will be a continuous activity, something like throughout the year. So if you're starting on 1st April, the activity will continue till 31st March, unless you're shutting down, you're closing down your business, or you're only opening in that year. In case if you're opening up the business only in that year, then what happens? Your business opens up only on particular day. Let's say you're opening the business today, that is 12th June. For this year, your activity is continuous from 12th June to 31st March, because you don't have that activity from 1st April to 11th June. That's okay. That's completely okay. So when you say continuous, it is for a continuous period of time, not necessarily throughout the year, but it is for a continuous period of time. So that's what we are calling it as business in general. But there are certain situations or scenarios. Generally, we said it is in continuous, but there are certain scenarios where a single venture, let's say a particular organization was formed only to do some particular government tender activity, let's say laying a road or building a bridge. After that activity, it is wind up. The time in which it takes to lay that road or something, let's say it is 2.5 months. So that activity, that venture will only be active for 2.5 months. It will be closed after that. It was never in existence before that also. So there could be scenarios where a single single activity still could be called as business, correct? So this is the differentiation. So what have we understood? We have understood the term business to say that business includes trade, commerce, and manufacturing. So that is about business. And then we said profession. It is actually classified. What are the activity that can be called as profession is classified under section 44A, whereas your section 2 clause 36 says that profession includes vocation. So when we say vocation, it includes activity like painting, sculpting. I don't know whether sculpting is the right word. So the sculptor, the astrologer, the author, so everyone will be called as the vocation. So that is also classified as profession. And then we understood all these three, that is your business, your profession, your vocation, all these three put together will be taxed and treated alike. That is treated and taxed alike. There is no differentiation. And then we said, generally business is a continuous activity, but there are specific scenarios where a single venture could still be considered as could be classified as profit and gains or business or profession. So this was the term business or profession. Now we have two more words to understand. What are those two words? The first two words, right? You call it as profit and gains. So we need to understand what is profit, what is gain. Okay, I guess some of you have come provide said about some technical issue. I guess now it's okay and you're able to see. I'm sorry if there is some issue about the way it started or something. So there are some technical glitch, I believe. I believe it is fine now. Ashita, if someone is retired service receiving pension from government or also some property rented out, so how will he classify as head of income? So whatever you're receiving as pension, we said it will be classified as salaries because we said section 17(1), which defines what are all called as salary, also includes pension. So pension is a salary income. And if he is getting any rental income, that part of the income will be classified under house property. So as probably you would have understood earlier itself, the first exercise of any particular computation is classifying the heads of income. So you'll have to classify each heads of income under every bucket. For example, you'll have to first understand what comes under salary, what comes under house property, business or profession, capital gain, other sources. So you classify each head of income. If someone is receiving a pension, it is salary. If someone is receiving rental income, it is house property. If someone is doing any kind of commercial activity, a business activity, it is PGBP. Share sales or something, now and then will be classified under capital gain. Any other income, such as your interest income, your dividend income, everything will be classified under income from other sources. So first thing is you should classify. So in your example, Ashita, you have pointed out that the person is receiving pension. So that pension is basically classified as salary. And then if there is any rental income, it will be classified under you classified under house property income. So that's what it is. So in this class, we have started with the third head of income, that is your profit and gains of business or profession. So that's what it is all about. So now we said we'll understand the other terms, that is your profits and gains. We have already understood the term business and profession. Now we are going to understand the terms profit and gains. So first thing that we are going to understand is profits can be in cash or kind. How many of you here remember the term barter system? How many of you remember the term barter system? So probably you would have studied in 11th commerce or something called as barter system. So what exactly is a barter system? Now I tell you, I will give you a 32-inch TV. Okay, I will give you. Instead, I will give you. You will give me, this is me, okay? So you will give me, probably let's take some OnePlus 9 phone, okay? 9 mobile. So you give me this mobile. So now, it is just a replacement, okay? So I give you a 32-inch TV, you give me a OnePlus phone. So we assume that these two are equally valued. So this is what you're calling as kind. You don't settle in cash, you're settling in kind. So typically, if I'm selling you a 32-inch TV, you're supposed to give me, let's say, 30,000. Okay, you're supposed to give me 30,000. But what did you do? Instead of giving me 30,000, you have given me something called OnePlus 9 mobile, and you're saying that it is equivalent to 30,000. This is how the trade commerce started in earlier years, right? So that is how it all started. But now, what we are trying to say typically is about that this thing that we are referring to in this chapter is the concept of kind. So what we are trying to say is whatever you're receiving as income in business can also be in kind. It is not necessary that it has to be only in cash. It can also be in kind. So one of the customer, instead of giving you money, is giving you what you call a thing that is also allowed. So that is what you're calling as kind. So when you say profits, the income that you're receiving for business need not necessarily be cash. It can also be in kind. Of course, when you're saying cash, it includes bank. So what we are saying is, in case if you have received in kind, whatever is the cash equivalent on that day of receipt. So in our example, we are saying 30,000, right? So this 30,000 will be considered as the receipt for that particular transactions, because on that day, the 32-inch TV was worth 30,000. So whatever you have received is supposed to be worth 30,000. So the cash equivalent, the value on the date of receipt shall be considered to be the income. So that's what we are talking about. And the second concept that we are supposed to understand is capital receipts. Okay, so the capital receipts generally are not taxable. When you say capital receipts, it is not revenue in nature. It is capital in nature. That is, it is towards your, let's say, fixed assets, or towards establishing an organization, establishing an activity. So some form of capital receipt that you are receiving is generally not taxable under business or profession unless it is specifically provided in the act that this capital receipt is taxable. This is a very general definition, probably you would have understood in the basic class also, where it says capital receipts are generally not taxable in the Income Tax Act, but if provided in the act, then it is taxable. One of the examples is your capital gains, sale of property. You receive money, it is a capital receipt, but income tax says it is taxable under capital gain, correct? So similarly, capital receipts are taxable only if the Income Tax Act provides that it is taxable. Otherwise, it is not taxable. So that's what it is provided in this chapter also, that is your business or profession also. It says in PGBP that capital receipts are generally not taxable unless it is specifically provided that it is taxable in the act. So that is the second thing. What is the third thing? Voluntary receipts. What do you mean by the term voluntary? What do you remember? What do you mean by the term voluntary? Voluntary is something you're offering on your own. That is, you're doing something on your own. No one is pushing you. No one is forcing you, or there is no requirement. Correct? So that's the term of voluntary. You would have heard this term in this various NGOs, right? Who provide service to public. Someone feeds the poor. Someone helps them for religious activity, various things. So there you call, I am a volunteer there. I am a volunteer there because it says that you're doing it on your own. No one is asking you to do. You're doing it on your own. So this voluntary receipt. So what if there are voluntary receipts? What do you mean by voluntary receipts? Let's say I am a practicing CA. Okay, I am doing a sole proprietor business. Now I have a client, let's say ARC Limited. Okay, now this client is suddenly on 12th June morning, 12th June 2022 morning, let's say 9 a.m. comes to my office and hands me 1 lakh. Comes to my office and hands to me 1 lakh rupees. Who? ARC Private Limited. Now for this money, I have not provided service. I have not raised no invoice. But he is coming and giving me 1 lakh. Okay. So now this is something called as voluntary receipts. So for voluntary receipts, income tax says if it is received in the course of business or profession, which means if he is a regular client, you would have provided service earlier. Currently, you have not provided service, but let's say 3 months earlier, I have provided a service and raised the bill also. So during the course of business profession, even if I'm actually receiving this money, it is taxable. It is also part of your business or profession. So that's what you're calling as voluntary receipts. So what do you mean by the term voluntary? There is no obligation to pay, but you're actually receiving in the course of business or profession. That is taxable. So that is what you're calling as voluntary receipts. And if it is in the course of business or profession, it is taxable as your in the heads of business or profession. Okay. The next category that we are going to understand is application of the gain. Application of the gains is immaterial. Application of gains is immaterial. So typically, application of gain, what do you mean by that? So typically, let's say I'm receiving so much of income. There is no requirement that I need to spend something. So if you have received an income, there is no requirement that you actually have to spend for a particular business, that you need to apply that income. That is not required. So that is immaterial. Similarly, let's say it is my business, but I am actually not there in that business itself. Someone else is actually handling the business operation. Can I say that, see, I am not the owner. I am not managing the business. Someone else is managing, so I will not pay taxes for that business. Can I say that? I'm still the owner, right? I'm still the owner. So as long as, even if I'm not managing it, even if I'm not managing, in some way or other, I'm giving some direction or control. Then it is still my income only. It is still my income only. Similarly, the activities need not happen throughout the year. So it need not necessarily happen throughout the year. And there are various trusts, right? Your temples, your religious institution, your various NGOs. So they are called public bodies. So whatever money that they're receiving as donations or whatever need not be actually spent for that activity. It will be, there are various provisions for trust where you can say you receive some gain and some amount is taxable, some amount is not taxable. So typically the point is application of income is not required. Ownership is different, management is different. You must be the owner for being taxed. It is not particular about the management. So that's what it says. So the fourth one, as far as we have understood here, is application of gain is immaterial. We are saying the activity need not be for the throughout the year. The activity need not necessarily be managed by the owner itself, the associate itself. And we are also saying whatever gains are received by the public bodies, that is your trust, NGOs, or government organizations, that is actually a gain and it is also taxable. So that is what we are saying. Application of gain is immaterial. Once you receive money, it automatically becomes an income. Application is irrelevant. And that is the fourth point. The fifth point is about legality. Now let's say a person, Mr. X, sells drugs. Drugs. So this is what? This is illegal, correct? This is definitely not allowed. It is never ever, in any form of manner, it is never allowed as far as we all know, right? So now this is actually an illegal activity. Now let's say he's caught. Now whatever he has earned is actually taxable. Whatever he has earned is actually taxable. It doesn't matter whether the activity is illegal or legal. It doesn't matter. So what we are trying to say is, irrespective of whether the income is legal or illegal, it is taxed. There is no differentiation between legal income and illegal income. So in some way or other, it is actually taxable only. So in no way you can say that, see, this money is not legal. This money is actually not allowed in the laws. In the eyes of law, this is not a legal income, so I will not pay taxes. You cannot say that. Whatever form of income you receive, it is taxable. So legality is irrelevant. Moment it is an income, as in some form of trade, commerce, or manufacturing, it becomes classified under PGBP and it is taxable. Correct? So that's about legality of income. The next one that we need to understand is distinct businesses. So what do you mean by distinct businesses? The point here I've mentioned here is compute independently, tax collectively. So what do you mean by that? I'll just give you an example. Now, I am a sole proprietor. Okay. Now, I am a dealer for, let's say, ITC products. I have a retail outlet for mobile phones. So I am also selling mobile phones. Let's say I am involved in manufacturing. So what do you manufacture? Something. What can I say? I'll say, let's say I'm manufacturing what? Matchsticks. Okay, I'm manufacturing matchsticks. So now I have three businesses. Now what income tax says is, these three are distinct. 1, 2, 3. All three is distinct. When you say distinct, it is independent. Each one is independent businesses. So you'll have to compute and understand profit. How much profit? You'll have to calculate profit independently. So you'll have to compute each of them. Let's say this is 2 lakhs. This is 4 lakhs. And this is a loss of 50,000. Okay. So now this is my income. So now it says it is independent. Each business is independent, but when you're actually paying taxes, you'll pay taxes for how much? let's say 5.5 lakhs, because you are plus this. So you are paying taxes collectively, maintaining income details independently. So each business is distinct, but when you're paying taxes, you pay collectively. So that's what you're calling it as compute independently. So I'm computing independently for three business: trade, retail, and manufacturing. And then finally, I'm paying taxes collectively. I'm combining all these three business and then paying taxes. And the last one that we need to understand is computation. Last one we need to understand is computation. So what do you mean by computation? So when you say profits, all these while we are talking about the concept of income, receipt. We are not talking about the word profits, right? So we are trying to say what are all called as income. From that income, you must deduct eligible losses and expenses. So whatever is allowed under the Income Tax Act, what is allowed as an income, what is allowed as an expenditure, what is allowed as the losses should alone be deducted from the income. That is what you call it as profit or gain. So what is taxed as a profit, not the gross receipt. Let's say I receive my receipt is 10 lakhs. Now in this I have rent of, let's say, 3 lakhs, salary of, let's say, 5 lakhs. Okay. So this is my expenditure. Now this is my receipt or income, correct? Receipt. But when you call income under Income Tax Act, when you call income, your income is actually 2 lakhs. So this only you are calling it as profit or gain. So this is gross. This is gross, and this is not income. Sorry, this is not your what is taxed. What is taxed is the profit or gain, where you mean by your this income. So that's what you're calling it as income. So that's what the provision says. Deduct eligible losses and expenses, and then what is taxed is the profits, not the gross receipt, not the gross receipts. So that's about your terms. That is, we said profit and gains of business or profession. We've understood what business and profession is and what should actually be called as profit and gains. So we said what is included, what is not included. How do you finally arrive at the profit and gain? So all this is what we have discussed right now. So we'll move on to the next area. I'll just see if there are any doubts, good doubts that I need to answer. Yeah, barter system refers to exchange of goods. Very good. Nega, I think I'm appreciating a little later, but of course, this is when I'm actually seeing those answers. Nega, Nalini, so all of them. So it's basically Imanshu, Poonam, so Arshita, Madhuri. So many of you have given answers of barter system. Looks like you have actually studied the basics of commerce in a very good manner. So that's what barter system is about. That's what we refer to as kind. Okay. Mansha, same is given in salary employee, provided the perquisite cash and both are taxed. Yeah. So perquisites also we send, kind is also taxable. So typically income tax, wherever we are talking about kind, income tax says understand the cash equivalent for that kind and tax it. We said housing accommodation, we arrived at a value, right? 15% of salary. So we arrive at a value wherever your benefits are provided in kind. Similarly, if your cash receipts, your income is in kind, that is also taxable. So yes, Mansha, similar to your perquisites where it is in kind, same applies here also. Raghavan, why NGO needs to pay for tax? That's a different chapter altogether. It is about trust. You'll study that only in final. But to just have a summary here, not all trust or all NGOs are eligible for tax exemptions. There are various scenarios that is applicable there, from registration to various complaints that needs to be followed. There are various conditions that an NGO should follow. Only then they get exemption. So generally, if you open up a trust, let's say you open up a trust and start giving money for children for education or something, whatever you're receiving as donation is actually taxable. So only when you follow the procedure provided in the chapter of trust, that is about your registration to various compliances, only then your income is exempt. So it is not straight away exempt. Whatever receipt is by the public bodies or this NGOs, it is taxable, provided if they have followed the procedures and their conditions applied to them. Only then it becomes exempt. So that's what we are saying, that whatever is received from the public bodies is actually a receipt, which is taxable. Poonam Sharma, taxing legal or illegal income. There are two different things. So typically, when you say that illegal, we could call it as black money. We could refer it as black money. So because it may not have been reported. So there is a different tax rate for your black money. Probably, I guess you would have studied those sections already, which is about your cash credit, unexplained cash credit, unexplained investment, unexplained thing. So that is what is all about your illegal income. So there is a separate rate for all those sections. So roughly, if you wanted to give me an idea, it is like 75% tax for the black money that is being reported into the system. So that's what it is about. Otherwise, let's say I am reporting on my own, something illegal, I'm reporting on my own. As of now, there are no different rates. It's the same. We are only talking about it is taxed in the same manner. That is, it is also taxed. If you have not disclosed, if the government identifies and taxes you, it is called unexplained cash credit. Then it is a higher rate. It is close to 75%. Otherwise, probably if you're reporting on your own, then there is no way, right? Someone is doing an illegal business, which means he does not want it to get accounted. So illegal business, illegal income will only be identified by government officials and then taxed. So the tax rate is different. It is 75%. Pooja, Ratan Tata has a lot of large businesses. Does that mean he'll have to pay tax on the aggregate income for all his business? Pooja, we'll keep it this way. Probably I'll write it down itself to the extent I know the business that Tata owns. So we'll call Tata Steel. Okay. Tata Motors. We'll now include Air India also. Okay. And let's say we have Chroma, that is called Infinity Retail. So Infinity Retail is your Chroma. Okay. So that is Chroma. Now let's say these are the businesses. These are the businesses. Now this Tata Steel, Tata Motors is all independently they are called person. So they are each company. So this will not be aggregated. Not aggregated. Why? Because we are saying each Tata company is an independent company on its own. It's an independent person. It's an independent person. What we referred here is the same person. We said sole proprietor, right? A sole proprietor, same person having multiple businesses, having diversified businesses. What Tata is doing is Tata has independent businesses, that is independent companies, that is independent person. So that's a different story. So there, this is taxed separately, this is taxed separately. So each of the companies is taxed separately. You don't aggregate all these startup group. Why? Because they're all independent companies. So that's what it is about. Hope I've clarified what Pooja wanted. So, so that's my answer for the question, Pooja. Immaterial concepts, can you explain about again? So this immaterial concept, that is application of gain. Probably what I'm trying to tell is, let's say I have an income, okay? I have an income. I have an income of 10 lakhs. My expense, what can I call this application? Is nil. Now can I say there is no application of gain, so I need not pay tax on it because there is no application of gain. So that can I do that? No, right? My 10 lakh is taxable. So this is one view of explaining it. The another view, what we are trying to tell you is, what we are saying is, now can I say this 10 lakhs, I am the owner, but not managing. Or can I say I'm not involved? So now I say, I have a business, I am the owner of business, I put money, but I don't manage. I don't know what is happening there. So now can I say, I am not involved. I don't use that money. I don't apply the income that I've received. It is not my money. They are managing. I have only given them the investment. It is not my money. Can I say this? I can't, right? So that's what we are saying. Whatever money I'm receiving is taxable irrespective of whether I am actually managing, whether the owner is actually managing or not. That is irrelevant. And similarly, the business need not be throughout the year. So I need not apply it throughout the year. Let's say I have received some income in April. The next income is only coming in December. It is okay. So there is no need to be a uniform application of money. It can be periodical also. So it need not be throughout the year. And whatever money I have received can be accumulated. You actually need not spend. So like your public bodies, NGOs or something, you get donations. That is an income to you. Even if you're not applying, that is still an income to you. So the point here is, whether you're managing, it is immaterial. Whether you're managing the business is immaterial. As long as you're the owner of the business, you need to pay taxes. And similarly, you need not do that activity throughout the year. It can be there periodically also. That is what is there. And the third one, what we said is, let's say I have a trust or something. Now, whatever gain I'm receiving from this public body becomes my receipt, becomes my taxable receipt, unless I satisfy various rules provided in the chapter trust. It is generally taxable. So for time being, please keep it because trust, I will not explain it here. So any business, I need not be the owner. I need not be doing it throughout the year. It is still taxable. So doing it throughout the year is immaterial. Doing it part of the year or throughout the year is immaterial. Whether I am managing or not managing is immaterial. Mageshwaran, yeah, right. Section 63 to 70 talks about your unexplained cash credit, unexplained investment or something. So all that is covered under that section. So, Manshan, illegal income, both income tax and money laundering act are applicable. Yes, money laundering act also could be applied if it is involved. So let's not go much detail into what illegal is about. Of course, that's not at all relevant. The point as far as income tax goes is it is also taxable. So that's what we are trying to say about the concept of your illegal money. So that's the only point. Sundhya Agarwal, see, if she was asking about Ratan Tata's income, Ratan Tata will not be receiving profits, okay? Now, whatever we are talking about, Tata Steel will only distribute dividend. Okay, so what Tata will be receiving is either dividend or let's say he might be receiving remuneration. So remuneration is salary, distributor of dividend is IFOs. So it has nothing to do with aggregation or business or profession. Whatever Tata is receiving will not be profits. It is called as dividend or remuneration. Because once it is a company, you don't take profits. Company only will pay tax. The shareholder of company will not pay taxes for the profit. So whatever we are discussing here is only about the business as a whole. So we are not talking about the distribution of income. Whatever Tata will be getting will be distribution of income or what you call as salary. So that's what you're saying. So I guess I've answered in both the ways whatever your doubt was. In case if it was about Ratan Tata's income will either be distribution of dividend, that is your dividend, or salary income. It will not be profits. It will not be business income. Okay, so we'll move on to the next topic. Now, the most important thing in this profit and gains of business or profession, that is in PGBP, is how you are going to account your income. So there are two forms of accounting, right? Two forms of accounting. What is the two forms of accounting? You can probably call it as cash, mercantile. So what do you mean by cash accounting? You record the transactions when you are actually receiving or when you are paying. So you only recorded the time of the transaction. Mercantile is on the basis of accrual, correct? So if salary is due on 30th June, you account it on 30th June, irrespective of whether you're actually paying it or not. If your rent is due on 30th June, you account rental, irrespective of whether you're paying it or not. So that's what accrual is about. Now, there are two forms of accounting, right? Cash and mercantile. You would have, of course, studied this in your 11th, 12th itself, in your schooling itself. So now, income tax provides a section, that is section 145, which says, we were talking about various sets of income, salary, house property. In salary, we said due or receipt, whichever is earlier, correct? We are not talking about cash, mercantile, and all, because there is no accounting in salary. Whatever you received is income, that's all. But in PGBP, we need to account. You need to account the incomes, you need to account the expenditures. Only then you will know how much is your profit on which you need to pay your taxes. So section 145 says that income under two heads, that is PGBP or IFOs, that is profit and gains from business or profession, or income from other sources, can be computed either cash system accounting or mercantile system of accounting. Only thing is, it must be uniformly followed. It must be uniformly followed. So the cash or mercantile system of accounting, whatever we are referring here, this account, that is cash or mercantile system of accounting, either of them can be followed, but you cannot change it year on year. You should follow it across a period unless you have a strong reason to change. So income tax says either follow cash system of accounting or mercantile system of accounting for the purpose of computing profit and gains of business or profession. Clear? So to compute PGBP, you can either follow cash system or mercantile system. So that's what section 145 says. And there is another section 145B, which says, but in certain occasion, there is no cash or mercantile and all. It is, of course, taxed only in the year of receipt. So 145B says there are certain incomes which is not taxable under mercantile system. It is only taxable on cash system. What are those income? These are interest in the form of compensation or enhanced compensation. What do you mean by this compensation? Typically, let's say I have a land. Okay. I have a land. Now, government wants to build metro project in that. So they want to acquire my land. They wanted to take over my land. So when they wanted to take over my land, they will give me some money. Okay. Let's say it is in prime location. Prime location in Chennai. Okay. Prime location in Chennai. Now, there the actual value of that land is 4 crores. This is your market value. But government provides 3 crores. Okay, this is what government provides, saying that that is only the actual value in that particular location. Now, the owner of this land dispute. He files a case in the court. So court takes its time, let's say 2 years, 3 years, and then they say, see, whatever difference, government must pay this difference of 1 crore to them. So the government declares this, the court declares this as an order. So subsequently, let's say they are receiving it in 2024. So income tax says this cannot happen on accrual. This cannot happen on accrual because you will only know at the time of receipt how much you are going to receive, how much is the interest towards that. So this proportion, whatever is the interest towards this, the interest towards this, interest portion towards this is taxable under IFOs. It's taxable under income from other sources. This is taxable only on receipt basis, not on mercantile system of accounting. So that is one example. Next example is whatever subsidy, grant, duty, drawbacks, etc. So any payback by the government, let's say government says, if you buy, let's keep it as, you are an electric vehicle manufacturer. If you sell e-scooters, per scooter, government will pay 10,000. Okay, government will pay to that company 10,000 for government will pay 10,000 to that company, one who is manufacturing these e-scooters. Now, I sell this e-scooter company sells in financial year 21-22. Let's say they sell for 1 crore. For this, they are eligible for 15. Let's say they are eligible for 10 lakhs subsidy. So government provides subsidy in FY 2022-23. How much? 10 lakhs. So this 10 lakhs is taxable in FY 22-23. So there it is not accrual. Though you know what could be the subsidy, it is still not taxable on accrual. It is only taxable on receipt basis. So these two income, that is the interest on enhanced compensation and this duty drawback, subsidy, grant, whatever it is, towards your P&L item, that is towards your profit and loss accounts, to that items will be charged only in the year of receipt, if not charged in the earlier previous year. If not. So what do you mean by if not? In case when I am reporting in FY 21-22, if I have reported 1 crore 10 lakhs, correct? If I have reported 1 crore 10 lakhs my income, which includes this 10 lakhs, which includes this 10 lakh is subsidy, correct? If it includes, I've already paid tax on that in 21-22. So I need not pay it in 22-23. In case if I have not included this, then this receipt is taxable in financial year 22-23. So that's what it says. These two income, there is interest on compensation and these government subsidies is taxable only in the year of receipt, if not taxed in the earlier previous year. So that's what the 145B is about. The third one that we are discussing here, it's more about final syllabus. I'll just give you a brief understanding of what it is about. It is called as Income Computation and Disclosure Standard. So the word is Income Computation and Disclosure Standard, correct? So this income computation is probably how to compute, when to compute, when to treat it as income. So there are, similar to your accounting standards, audit standards, these are standards provided by Income Tax Act to give clarity to the provisions. So income computation and income disclosure, what to disclose, when to disclose, how to disclose. So all these data is what will be provided in your income computation disclosure standard, which has to be followed by every tax person, every company, whosoever has a business income must follow this income computation disclosure standard. There are totally 10 standards, but however, the standards, when we say all, it is not required by HUF and individual who are not subject to tax audit. HUF and individuals who are not subject to tax audit. So it is not applicable to them. So that is why we are saying it is not applicable to your intermediate syllabus. It is applicable to your final syllabus. Because anything related to your tax audit is more important. Your other than individual and tax audit related things is only important in your final examination. So 10 ICDS. Your study material lists out the 10 ICDS. I am not going to list out because I feel it is unnecessary to you, because those ICDS is only important to your final. But of course, you can read through in study material and know what are the 10 ICDS, but it has nothing to do with your examination, So this 10 ICDS is applicable for your final examination. So time being, what should you understand? Method of accounting depends on ICDS, what is provided in the ICDS, and what it is, you'll learn it in the final. So for here, you stop your learning with this too, correct? So that's what it is about. So this is only for your info, not for learning purposes. It's only for an information to you. So what did we say in this slide? We said method of accounting is important for profit and gains of business or profession. The first thing that we are saying is Section 145, subsection 1 says, both IFOS and PGBP provides an option to follow either cash or mercantile system of accounting, but it is one time. You cannot keep changing. Once you have opted, it needs to be continued unless you have reasons. And then the next one is, as per section 145B, two situations, the income is taxable on receipt basis and not on mercantile system, that is accrual basis, even if you are following accrual system of accounting. What are the two scenarios? The first thing is interest on enhanced compensation. The second one is subsidy, government subsidy received. So these are the two scenarios where your income is actually taxable in the year of receipt and it has nothing to do with your accrual concept. So that's what it is about. The third one, it has nothing to do with your intermediate itself. It is about ICDS, which will be discussed in final. Clear? So with this, we have understood the basics of what your PGBP is about. Mansha, compensation or enhanced compensation is taxable under other sources. The compensation is a capital gain. The compensation is a capital receipt. It is taxable under capital gains. The interest, the section talks about only in the interest portion. The interest portion is taxable under income from other sources. Raghavan, if I've received in financial year 22-23, I need to pay in assessment year 23-24. We are paying in previous year itself. No. What I am referring is the financial year and previous year. So what I am saying is, when you say taxable in financial year 22-23, it is nothing but assessment year 23-24. So you will pay tax only in assessment year 23-24. You will only file your return of income. So don't confuse. I have used the word financial year, but what I am referring is previous year only. So if all this what I am referring is basically previous year. So if it's an income relating to previous year 21-22 or assessment year 22-23, in case of subsidy or grant, it is only taxable in the year of receipt. If it has been received in previous year 22-23, it is actually taxable for that year, for which you will file your return of income in assessment year 23-24. Assessment year is important to understand about the filing of return of income and when your income is actually assessed, computed and all. Yes. So previous year income is taxed in assessment year. So an income received, an interest received in previous year 22-23 will be taxed in assessment year 23-24. So don't confuse that beyond a point. So typically it is taxable in the year of receipt. You can use previous year or assessment year however you want. It is taxable in the year of receipt. Okay. So now we are going to understand the charging section. Now I want you to tell me what are all the charging sections. I'll write the chapters. Okay, I'll write the chapters. Salary, house property. So this is the two things that we understood right so far. Now we are in PGBP. So I want you to tell me what is the charging section for salary. What will be the charging section for chapter the head of income salary? So salary includes what? So salary is taxed. Every chapter or every head of income will have a charging section which tells you that this income is actually taxed. So that only gives the power to tax a particular income. So now we are talking about a section relating to salary. So this salary is typically what section is about salary. So salary section, some of you can answer. So probably there might be a lag in me asking you and you providing the answer. So typically, yeah, some of you have answered it correctly. Swaroop, yeah, you're correct. Swaroop, Himanshu, Mageshwaran, Hitesh, Siddhappa, Pooja, okay, there is a small correction. Arshita, correct. Akashni, Section 4, you have gone to the whole IT Act also. Good, Akashni. The whole income tax, Section 4 defines what is charging section. So 4 says there will be a charging section to tax and income. Good that you remember that also. Also Kaveri, Pooja, Hitesh. So everyone have answered. Only thing is salary is 15. Some of you have answered 16. It is not 16. 16 is deductions. deduction. 15 is only salary, is the charging section. Similarly, for house property is 22. So now we are going to talk about section 28, which is the charging section for PGBP. So good participation by most of you. Oh, some more answers too. I have lots of names to answer. Swadi, Mathuri, Mageshwaran, all of you have answered correctly. Hitesh, Memam Rafiq Bhai, Shraddha, Mukta Vyas, Preeti Panchal, Jodi, Adarsh, Madhuri. So all of you have answered correctly. Very good. Give a pat yourself up. So salary is 15, house property is 22, and PGBP is 28. So we are going to talk about section 28 right now. So what exactly is section 28? It is the charging section for PGBP. So this section will tell you what are all the income that will be called as business, which will be taxable under this particular head of income, your profit and gains of business or profession, PGBP. The first thing is straightforward. What does it say? Profits. So if you have a business or profession, the profits from the business. So you're not taxing the gross receipts. What you're taxing is the profit. So the profit and gains of any business or profession which was carried on by the associate during the previous year. So if you have carried on a business in that previous year, if you have made some profit or gain, it is applicable. So what is the difference between profit and gain? It is almost the same term. Profit is typically a business term, a commercial term. You're doing some trading, you're doing some commercial activity, a manufacturing activity. What you receive is profit. Things like your selling and buying of securities, something which is related to certain buying and selling or something will be called as gain. But profit and gains overall takes the same concept of profit. So that's what it is about. So generally in retail terms, it might be called as gain. In manufacturing or something, it could be called as profit. So that's what it is about, your profits. Okay, so anytime during the previous year. The second, I've just given you a short keyword for you to remember this. This is the actual provision. So this is the actual provision. I've just given you a keyword for you to remember what it is. So the first one is profit. The second one is association. What do I mean by the term association? I mean that any income derived by the trade, professional, or similar association from specific services performed from its member. So if it is not an individual business, if it is some form of an association, a group, some association of person or a trust or some of these kinds. So association could be, for example, could be an institution, a chamber of commerce. So there are various things that is a public body association. It's for a common purpose. So whatever they are receiving, income derived from their trade, their professional or similar association is also performed by its members. So those association. So what could be an example of this? Chamber of Commerce. So we can call Chamber of Commerce as an association. So there are several associations, right? ICA is also kind of an association. It has its member, it has various income and other things. So basically these activities performed by these associations, income raised by them, income collected by them is also a business income. That is association. And then you have incentives on export business. Government wants you to export more. You would have heard about the term Atmanirbhar Bharat, right? So it is basically make in India. It is made in India and then it is sold outside India, so that you are expanding your horizons outside India. So when will you be interested to do that? If I tell you, see, if you are actually selling to America, I will give you 5%. Will you be happy? Very happy, right? If you are actually selling within India, I'll tell you, I'll not give you anything. So you will be inclined to sell to export. You'll be inclined to sell outside India. So there are certain incentives in certain businesses to promote such businesses. So if you're receiving any subsidy or grant or any duty drawback towards such transaction, that is also a business income. So whatever you're calling it as cash assistance received against exports, and then any duty drawback received against exports. So that's also a thing. And then any duty any profit of transfer of duty entitlement passbook scheme, and then you also have replenishment certificate. So these are all relating to your exports. And then what? So these 4 things, right? A, B, C, and D. These 4 things are typically government encouraging you to do export business, giving you some form of return, saying that either as a cash or a duty drawback or a subsidy or whatever form it is, some form of return. They are returning you a portion of income for you to make better profit. So that is also classified under business or profession. And then the next term is benefit. What benefit we are talking about? So basically, we said perquisites are taxable under salary. Perquisites of an employee is taxable under salary. What if there is an extra benefit provided by our client? We said, right, in kind, that is also taxable. Voluntary receipts, we said that is also taxable. So what if there is some form of benefit provided to this organization, to this business, some form of perquisite, whether it could be in cash or kind, what does it happen? That is also taxable. So some form of benefit returned back to that organization is also taxable under PGBP. And then partner share of profit. So anything called as interest, salary, bonus, commission, or remuneration, whatever name you wanted to call. You can call whatever you name. Whatever is being received by the partner from the partnership firm, other than profits, is actually taxable under PGBP. Let's say there is a firm called VMCA. Now this VMCA has 2 partners. Okay, we'll have what we call Vinay. We'll have as Vinay, and then we'll have Mogit. Okay, we'll have 2 partners. This Vinay and Mogit will receive salary, interest on capital. So this income, okay, this income is actually taxed under PGBP. It is taxed as PGBP. Though it is salary, it is not taxed under salary chapter. Why? Why is it not taxed under salary chapter? Please just answer. In the meanwhile, I'll keep continuing. So I'll just look at the answers a little later. So I'm not going to tell you why. So I want you to answer. All of you have answered earlier. I want you to repeat it to tell me why this salary is not taxable under that salary. So salary, interest on capital, whatever is being received by this Vinay and Mogit from this Vinay Mogit Chartered Accountants is actually taxable as PGBP. So that's what we are trying to tell. So this profit to the partners, the salary or whatever is being paid to the partner is being taxed under PGBP. But there is a small check to this. You can't pay how much ever salary you want to the partner. You can't pay how much ever you want. There is a restriction. The restriction is provided in section 40B. For example, interest. Maximum interest the partner can receive is 12%. Maximum interest the partner can receive is 12%. Similarly, for salary also, there is a slab to what extent salary can be provided on the profits. So now, this salary, bonus, commission, remuneration, whatever it is taxable under the head profit and gains of business or profession. So now, can I go back and see whether some of you have answered correctly? I guess I'm still yet to receive answers. In the meantime, I'll just see if there are some other questions that I can answer. Madhuri, net profit or business level gain may be unrealized. See, that's what. In case if you're following accrual method, you might have unrealized income also. If you're following cash system of accounting, there may not be any unrealized gain. So it depends on what type of accounting you're following. Others, what is duty drawback? We'll take an example. I'm importing, okay? I import some, let's say, mobile accessory, a part, okay? A part in a mobile phone. Now with this, I manufacture mobile. Some of you, if you are actually familiar, I'll actually name it also. I'll say I'm importing Snapdragon processor. Let's say I'm importing Snapdragon processor. Okay. So I'm importing this. Now using this, I'm manufacturing this mobile. Let's say CA1 Pro. Okay, we'll just name it for the namesake. Now, the Snapdragon processor, when I'm importing, I would have paid customs. For just understanding purpose, we'll keep customs as 10%. Okay, so I paid 10% customs. So what the income tax, indirect tax law says is, for certain products, if you're actually importing and you're manufacturing some other product and exporting. So now you're exporting. Okay, exporting this to US. You're importing this from, let's say, UK. Now you're again exporting this to US. So I've imported a part, I'm manufacturing, I'm exporting. So government says when you are exporting, I will give you duty of 2% back to you. Duty drawback. So you're drawing back the duty paid by you. You have already paid 10%. Now you're drawing back the duty that you have paid, the 2%. So that's the word duty drawback. You're drawing back the duty that you have paid. So that's why it is called as duty drawback. So the hope others, you are now clear with what duty drawback is. Mohammed Tawfiq, what foreign fluctuation receipt is? Foreign fluctuation receipt is basically an income only, but only when you're actually realizing it. There are two types of thing, unrealized, realized. So the realized forex fluctuation is an income. So whenever you're realizing the difference in foreign fluctuation, it will be treated as an income under your head. Mansha, government providing support to promote startup in India, will it be taxable under PGBP? Any business income is taxable under PGBP. In case there are any receipt from government for the startup, if it is towards income, if it is towards your profit and loss thing, that is your income, sales, then it is classified as PGBP. So whatever government supports towards this import and export, whatever is being provided through this import and export will be classified under PGBP, that is drawback or whatever concession is being provided. Mohammed Tawfiq, should TDS be deducted under 194A? Whatever is being paid to a partner, nothing needs to be deducted. So no tax deduction is required. The question is ahead of what you're supposed to learn. Anyways, you will learn that in detail when you're going through the chapter. Just for the sake of answering you, it is not required because any amount paid to partner, there is no requirement of tax deduction because it is like putting from a right hand to left hand. So that's what the transaction is about. So there is nothing to be deducting about. Yeah, many of you have answered the question of why this is not taxable under salary. Why is this not taxable under salary? Because there is no employer-employee. Very good repeated answers from Pooja, Magadev, Akashni, Hitesh. Okay. Pooja has answered correctly. Sumit, Magadev. And then you have okay. That's what some of the exact word should have been. There is no employer-employee relationship. Only few of you have actually exactly stated, like Pooja, Sumit, and Magadev. So typically, it is not treated on salary because there is no employer-employee relationship. And PGBP says taxed under profit and gains are proportional to them. So that's the actual answer. So good for whomever have answered the word. The exact words that I was expecting from you is there is no employer-employee relationship. So as I told you, Pooja, Sumit, Magadev have exactly given these exact words. So good for that. Mohammed Tawfiq, whether 2% is an example. Whatever I talk about indirect tax is only example because I cannot teach you indirect tax. So whatever this 10%, 2% and all is a rough example because whatever we are talking, Duty drawback is about giving back the taxes, but the rate is only discussed in indirect tax chapter, not in income tax chapter. So whatever I'm telling is only an example. It is definitely not the actual rate. So it's purely example purposes. Good. So we'll move on. So that's the first set of thing that we have discussed. So I guess it's 7:15. So probably we'll take a short break, a 10-minute break, and come back and understand the other sections of other charging items under section 28. So kindly take a short 10-minute break and please come back. Yeah. So welcome back after the break. So as I told you, we'll continue with the next set of charging section. That is continue with section 28. So we had earlier discussed about straightforward things, right? The profits, the association related income, and then we said benefit in case of kind, cash or kind, and then we said about partners being paid. So all this we discussed. Now what we are going to discuss about abstain. So when you say abstain, you refer to the term not doing something. So typically, if you actually look at it, if you're receiving a money for not doing something, looks very strange, right? Generally, you are paid for doing something, but income tax is we are paid for not doing something. What is that they're calling it as? They're calling it as not carrying out. Sorry. So they're calling it as not carrying out any activity, not carrying out any activity in relation to any business or profession. So not carrying on any activity in relation to any business. So that's what they're saying. So you say that I will not engage in this business or profession for quite some time. If you wanted me to tell an example, probably we'll take an example in such a manner that, let's say I am currently partner in a particular chartered accountant firm. Now I wanted to move out of this firm. There is a possibility that my firm has like several clients. Some of them will be attached to this firm because of me. Okay. Now, when I say I wanted to move to another firm, or let's say I'm going to start my own practice, the firm might tell me, see, if you immediately start a firm, the clients that are dependent on you will come to you straight away. So there is a possibility that we may lose client because of you moving over. So why don't you not do anything for 2 years? For the next 2 years, you don't do anything related to chartered accountancy. We will pay you money for that. If the firm offers me something like that, that's what we are referring here. So we are saying that not carrying out any activity in relation to any business or profession. So that's the first thing they're saying. Second thing is also about not sharing. Not sharing. What should you not share? Let's say I have a very unique process. I have innovated something, a new process, for which I've got this patent. It's a patented process. Now, this process for which I have patented, let's say I have an association with my organization. My organization says this patent right, whatever you have developed belongs to us. You give us the rights to do it. And you are not supposed to share this with anyone else. You are not supposed to share this with anyone else. So the patent that I own, I'm giving it to my organization, and my organization tells me, we can use this, but you're not supposed to give it to anyone else. For that, we will pay you. So, two activities we are saying: not carrying, not sharing. So, not carrying an activity, not sharing the patent, copyright, trademark, license, franchisee. So, this is what we are actually talking about, right? So, these two things, if you are being paid, then it is taxable under profit and gains or business or profession. So, remember, we studied in the first slide, generally a business activity is continuous. But here we are saying, whatever we are receiving for not carrying, not sharing is a one-time payment. It is still taxable under business or profession. So you're not doing anything continuous activity. So it's a specific scenario where you are receiving money for one particular activity. So this is also called as business or profession. So that's what we are calling as not carrying, not sharing. So this is also taxable under PGPP. There is a exception to it. So they are saying that the transfer of process, whatever is taxed in capital gain. So if this transfer of process, that whatever right I'm giving it to my company or whatever is happening, if that process, that income is already supposed to be taxed under capital gain, then it will not come here. So similarly, any compensation from this concept of multilateral fund or Montreal Protocol, don't ask me what is that and all. See, typically, whenever you call a protocol, it is entered between two countries for a specific reason. So, for a specific reason, there is a protocol between two countries called as Montreal Protocol. So, if there is any compensation received from that fund based out of the protocol, that is also not taxable under this particular thing. So, typically, not carrying, not sharing is taxable under PGBP. But if it has already been taxed under capital gain, or if it is related to a compensation from this multilateral fund, it is not covered under this particular clause. So that is clause 5A, abstaining. The next one that we are going to discuss about key man insurance policy. What do you mean by key man insurance policy? So basically the key management person, so that's what is called as key man. Key managerial persons is called as key man persons. So this key man person, for the key managerial person, a company, an organization will enter into a insurance policy. Why? If something happens to them, or if suddenly they are no more, or something, let's say some worse situations because of which their continuity in this organization gets affected. Because of this, we might lose business or there might be a loss to us. So these persons are called as key managerial persons. So if there is an insurance policy on their name, that is key man insurance policy, if an organization receives any sum under the scheme and insurance policy, then the sum plus the bonus allocated, the sum insured plus bonus allocated is actually taxable under PGBP. It is taxable under PGBP. So the sum received, the amount of money received from these people, from the insurance company, is actually taxed under PGBP. So the key man insurance policy, any sum received under a key man insurance policy, including the sum allocated by way of bonus, is what? Is taxable under PGBP. That is key man insurance. Next to stock. What is stock? It is inventory, right? Inventory. So what happens generally is there might be a situation where a capital asset, a stock in trade, is being now converted into a capital asset. A stock in trade being converted into a capital asset. So what it says is the fair market value of the inventory as on the date in which it is converted into capital asset, will be the income under PGBP. So what is actually happening? It is a stock in trade. Now it is being converted into a capital asset. I'll give you a small example. This example will hold good for capital gain also. So what exactly are we talking about? Let's take a builder, okay? Let's take a builder. He has various, of course, you'll have various land assets and other things, right? So he has now a particular thing as a land, as stock in trade, as stock. Let's say that it's in Mumbai area called Orly. So now in this area, there is a land which is being maintained as a stock by that builder. Now this, let's say, was actually purchased in 2015. Okay. Now in 2022, the builder thinks, let it not be a stock in trade. We will build some apartment there and sell it to public. That's what he was thinking. Okay. He was thinking, let this land be kept to build an apartment and sell it to public. That's what he thought. Now what he thinks is, why don't I build a own corporate office in that land and own it for myself, for my own office? So now I'm converting to capital asset. If it's a stock, you have kept it for selling to public. Now you're saying, I will keep it as capital asset. Let me build my own corporate office in that land and keep it. Okay. So this becomes capital asset. So what does income tax says? Income tax says, let's say it was converted on 12th June 2022. So income tax says the fair market value on this particular date. How do you arrive at the fair market value? Income tax provides rules to, income tax has prescribed rules to tell you how to calculate the fair market value for each of the type of asset. What to do if it is land, what to do if it is jewelry, what to do if it is a share, each of this. So what is the prescribed manner? It is in for final. So this only till here you will have to understand in intermediate, but there is a procedure provided by the Income Tax Act on how to arrive at this fair market value. So this fair market value on that particular date of conversion from inventory to capital asset should be treated as PGBP. Why? Because on that date, it is like you have sold that asset. It's like you have sold that particular land, so it has become a receipt. So that becomes a PGBP. And then you have specified business. Any sum in cash or gain on account of capital asset being demolished, destroyed, discarded, or transferred. What type of asset? Whichever has already been claimed as deduction under section 35AD. So what is 35AD? 35AD is called specified business. Okay. At this point, what should you understand is, for certain specified businesses, 100% of capital asset will be deduction, which means the entire value of capital asset you are claiming as an expenditure. So generally, when you talk about depreciation, it's going to be, let's say, 15% or whatever percentage. But here, 3580 says if it is related to this certain businesses, the entire investment of your particular capital asset can be claimed. It is 100% depreciation. So you can claim 100% deduction for that expenditure. Now, this asset, in case in future, whatever for what you have claimed deduction, if it is subsequently, let's say after 3 years, you are demolishing, destroying, or discarding, or transfer. So that asset is no more in existence. So that asset is in no more existence. It is being demolished, destroyed, for which you are getting some money, for which you are receiving some money. That money is taxable as PGBP. Why? Because earlier this was claimed as expenditure. Okay, revenue. It was claimed as if it was. I will not use the word revenue. I'll leave that word. Earlier it was claimed as expense in P&L. So now if you're receiving, what receipt you're receiving? You're receiving something in the form of for that particular asset. So you're receiving for that asset. So now this is an income in P&L. Okay, so that's what this says. So this says if it is relating to a specified business, if that asset has been discarded, destroyed, or demolished, or transferred, for which you have received some cash, some money in cash or kind, that becomes PGBP income. Okay. And the last one with respect to section 28 is clause number 2 of section 28. This is also a compensation, similar to what we said of doing nothing for which you're receiving some money, abstaining from doing business or profession, right? Or not sharing, right? Not carrying on any activity or not sharing any business process, patent, or whatever. So similar to that, here also there is some compensation for some activity. We are going to talk in 2 columns. The first column is going to tell you, that is this column. This column is going to tell you what is the money that you are receiving, and probably why are you receiving this is discussed in this second column, nature of compensation. So what is the A and B saying? It says managing the whole or substantially the whole affairs of Indian company. So if you are actually managing, so you are the in charge of that particular organization, you are the management. So you are managing the whole of the affairs of the Indian company, that is A. Any other company in India is B. So the A and B, if it is relating to an Indian company, it is covered in subclause A. If it is relating to any other company, it is covered in subclause B. Is this A, B important? No, because you are intermediate level. As long as you remember the provision, there is nothing like that. So what you need to know is remember the provision, try to understand the provision, interpret the provision, and then you will be prepared for your examination. So that's what it is about. So section numbers, it is great if you could remember. It is okay if you don't remember at the intermediate level. Key sections you can always remember, as many of you pointed out about the charging section and all. Similarly, key sections you can remember. Rest of the thing, it is okay if you remember. You need not remember the subclause and all. You can always say section 28. So that's completely fine. So that's what is with respect to. So what am I trying to tell? The person who is receiving is discussed in the first column. The second column is what is he receiving. So the person who will be receiving is the person who is managing the organization, managing the affairs of the organization, whether the company in India or any other company. Any other company, a foreign company whose branch is in India. It could be like that. It's an Indian company or any other company located in India. So for what are they receiving that money? They're receiving money for termination of its management. So they say from today you need not manage this organization, you please go off. So that termination, If you actually remember, there was this recent Twitter story going on that Elon Musk might purchase Twitter, might acquire Twitter. Once he acquires Twitter, there was a news going on that the particular management person, the CEO, the current CEO, might have to be terminated. When terminating, he must be paid so much of millions of money, right? So probably if some of you would have read this news, so why are they paying to that person? They are paying to that person because the person who's currently managing is terminated from that office. So that's what you're actually calling this. So termination of his management or office, or there is some modification. So the existing terms and condition of that particular officer is being changed. It is being modified. So if it is being provided for this, so the management is receiving for what? For termination of the role that he is carrying on, or some modification to the role that he is carrying on. For that, whatever he receives will be charged to income tax under chapter PGBP. And holding an agency in India, the next clause is holding an agency in India for any part of the activities relating to the business of any other person. So holding an agency in India, what do you mean by agency? The principal agent, if you're a dealer, distributor. So you're an agent in India for any part of activity relating to business of any other person. Let's say you're an agent of Apple phones. I tend to give example with related to gadgets itself. I'm really sorry for that. I guess every time I'm ending up with saying some mobile phone or something related to gadgets. If some of you are not interested in gadgets, I'm really sorry. So basically, let's say you are an agent of Apple phone. So you are an agent. Now, whatever you're saying that you no more need to be the agent of Apple phones. I'm terminating. Apple says we are terminating. Or there is some modification to the existing terms for which Apple is paying to the agent. So in this case, whatever is being received from the agent is actually taxable under PGBP. Next is basically there is in connection of this government or in any corporation owned by the government. So it's a government entity being paid to that management of that particular business or something. So if there is any money received from the government owned entity to its management, so that is also classified under PGBP. And finally, there is this miscellaneous clause which talks about the term any person. So it could be any person who's receiving for termination or modification. The same thing, whatever we discussed earlier in clause A and B and clause C. A and B was for the management. C was for agency people. Now E is for any person. Any person. There is a contract between two persons. There is no principal agent relationship. There is no management company relationship. If there is any person with whom they have entered contract, if there is any change in the modifications in the terms and condition, or the entire thing is terminated, in that case, that money will also be charged to PGBP. So that's all about section 28. So we have discussed about section 28. We started with various areas such as profits, association, incentives of export, benefit in cash and kind, partners remuneration, interest, bonus, whatever it is about. Then we discussed about abstaining, not carrying out any activity or not sharing out any secret process or something of that kind. And then we discussed about keyman insurance. We said any amount received from keyman insurance policy, including bonus, is taxable under PGBP. And when a particular asset is converted from stock to capital asset, the fair market value on the date of conversion will be treated as the income from PGBP. Specified business, what we are talking about is a business specified under section 35 AD. It is typically a business where you get 100% capital expenditure as deduction. So what happens when you're claiming 100% as capital expenditure? It is like 100% depreciation. When you're subsequently demolishing, destroying, or transferring, or doing anything with a capital asset for which you have received money, that money is also taxable under PGBP. And finally, the second clause where we said if there is any change in the terms and conditions, if there is any termination of the contract or change in the terms and conditions, modifications to the terms and condition with respect to a management, with respect to the agent, with respect to a government controlled entity, and finally any other person. if there is any change in the modifications in the agreement, or it is being terminated, if the agreement itself is being terminated, for which money is being paid to them, that is also taxable under PGBP. Clear? So this is all what we are talking about, charging section 28, which income will be taxable under profit and gains from business or profession. Clear? So that's all about section 28. So we'll have to move on. Arshita, whether key man insurance policy basically means whether an employer takes life insurance policy for his employees. Not all employees. So typically that's what, remember this word, key man, key managerial persons, key managerial persons. So without them, probably the organization will become standstill. The organization may not continue its operation also. Such key persons, let's take Tim Quick of Apple, Narayana Murthy of Infosys, right? Ratan Tata of Tata Group. So these are all key managerial persons, right? If there are insurance policies on them, just imagine there are insurance policies on them. Such key managerial persons, because of whom the operation is happening. Let's say I'm a partner in a chartered accountant firm. I become the key managerial person of my chartered accountant firm, right? So similarly, the key persons because of whom the organization survives, the organization continues to perform. That's what you're actually calling it as key managerial person. Mohammad Tawfiq, why demolish destroying becomes an income? When you demolish or destroy, let's say you get some amount of scrap, right? When you're demolishing a capital asset, you might get some income as scrap. In case if you're receiving anything as scrap, that is also becomes an income. So that's what we are calling it as. So whenever you're receiving anything regarding this 3580, because it is an asset for which you have actually claimed 100% deduction. So if that is being demolished or destroyed, whatever was claimed as deduction will now be treated as an income. So typically the 3580 assets should not be transferred or demolished or destroyed. Nothing should happen to that asset. It should see through the life of the entire wear and tear. It should only be scrapped at the end of the lifetime. So if in between, if you're demolishing or destroying, the deduction that you have already claimed becomes an income, because it was a capital asset for which a benefit was given to you. That asset is no more. So that portion will again be treated as an income. Pooja, stock to capital is like transaction in kind. Yes, you're right. So because you're just transferring the property from stock in trade, it's just a book entry, right? Currently it is in stock in trade inventory. Now it is becoming a capital asset. So let's say it's a land. What do? You debit land capital asset to land stock in trade. So that's what, it's only a book entry. There is no money being transferred between them. So that's why the fair market value becomes the value. Mohammed Tawfiq, yeah, insurance matured and claimed is an income. So whenever you are receiving income, insurance income, you are claiming an insurance income, that becomes an income. So that's what it is about. However, in capital gain, you will see a slight variation. But whenever it is related to insurance of basic inventory or something, it will be treated as an income only. Okay, so that's all about section 28. We'll now move on to the next topic. Speculative business. So we are going to discuss about the business of speculative. So the next area that we are going to understand is about what is called speculative business, when is it taxable, what is speculative, what is not taxable, what is not speculative, when is it actually taxable. So that's what it is about. So to understand this, first thing that we need to understand is section 28 explanation 2. What does it say? It says speculative business is distinct. It should not be combined with any other business. It is completely independent. Why is it independent? Because of section 73. Because losses from speculation business cannot be adjusted with any other regular business. It can only be adjusted with speculative business. So let's say I have two speculative business. In one I have profit, in another I have loss. I can adjust. But let's say I have one speculative business, one non-speculative business. I have made profits in non-speculative. I made losses in speculative. I'm not supposed to adjust. Anyway, this detailed set of carry forward we'll study later. But for currently, what you need to understand is any speculative business must be treated independently, distinct, separate business. So you should not combine with your other businesses. Why should you keep it separate? Because losses from such business cannot be adjusted with profits from non-speculative. We have been continuously using the word speculative. So we need to understand what is speculative. So the definition is provided here in section 43. For your understanding, section 43 is the definition section. Definition section for PGBP. So any definitions specifically provided for the chapter PGBP will be provided under section 28. So what does it say? It says a transaction in which a contract for the purchase or sale of any commodity, including stocks and shares, is periodically or ultimately settled otherwise than by the actual delivery or transfer of the commodity or scrip. So what they're trying to say is, I'm actually purchasing or selling certain stocks, securities, or shares, but it is not being settled by actual delivery. What do you mean by it? For example, if you are purchasing a share, let's say you are purchasing a share of Zomato. Now, this Zomato share, I am selling it on the same day. I am purchasing it in the morning, I am selling it in the evening. So nowhere the share is actually registered in my name, but I'm still dealing in share. I'm dealing with Zomato shares, but I'm actually not making, but in nowhere my name gets registered in Zomato stock registries that Muthu owns so much of share. It doesn't get registered. Why? Because I'm purchasing it in the morning, I'm selling it in the evening. So within the same day, I'm doing it. So I am not actually owning any shares. So that's what is actually called as speculative. So there is no actual delivery. You're not actually buying anything, but still you're buying. So if it's confusing, please understand it this way. You actually don't buy that. You just do a deal. You do a transaction, but you're actually not buying that. So that's what it is about. So it is, one example is intraday. So what happens? Let's say on 12th, today is Sunday, so it's a stock market is holiday. So we'll take 2 days before, 10th June. On 10th June morning, I am buying Zomato share. Afternoon, I'm selling it. Afternoon, around 2:30 p.m., I'm selling it. So nowhere in Zomato stock registry, my name will be registered because I'm not owning it. I'm only dealing it. I'm not owning it. I'm only dealing it. So that's what is about speculative transactions. But there are some exceptions to it. Though you are not actually owning something, certain transactions are actually not called as speculative. One of them is hedging forward contract. This hedging and forward contract, hedging is basically to play with foreign exchange fluctuation. So if you think that tomorrow foreign exchange will go down, you hedge the currency to compensate the loss. Okay. I do not want to go into this topic in detail. Hedging is basically playing with foreign currency. If you think the foreign currency will go up, you hedge your currency and try to compensate the loss that you might make. So that's what hedging is about. So try to understand this, the basic understanding. So what is hedging? Hedging is trying to compensate your losses that you may make on your foreign currency. So you're actually not buying the foreign currency, but you're trying to trade the foreign currency to compensate the losses that you might make on your foreign currency. So that is hedging. Forward contract is the same concept or similar concept in terms of share market. You are actually not buying the share, not even for a second. You are only betting on the share. So in future, you think that the share will go to this extent. So that you only pay the premium or discount of the share. You actually don't buy the share. So you're only dealing with the movement in the share value, premium or discount. You're actually not trading. Trading in derivatives. Derivatives also a similar kind. Trading in commodity derivatives. So you're trading in oil, gold or something. So these are commodity trading. So that is also trade. Or your principal business itself is trading in share. Your primary activity itself is buying and selling shares. You are an investment company. You are buying and selling in shares. In that case, your trading in share is not speculative. And similarly, banking business. Those in banking business, Whatever they do is not speculative. Granting of loans and advances. If you're in the business of granting loans and advances, something like your NBFC, non-banking financial corporation, so they are also not speculative. So these are the businesses that are actually not called as speculative. So hedging, forward contract, derivatives, commodity derivatives. If your principal business is trading in share banking or granting loans and advances. So these are the areas which are called as speculative businesses. These are areas which are actually not called speculative. And what happens? Speculative business must be distinctly treated, independently computed, because losses from speculative business cannot be adjusted with non-speculative, other than speculation business. So that is about speculation. Speculation business is illegal business. Mageshwaran, no, definitely not. You are allowed to do it. It is properly legal because it's actually not betting or kind of something. It is about forecasting. Probably we can call it as forecasting. So it's actually kind of gambling, but I do not want to call it as betting. So it is more of gambling. It's like by chance, by luck. You have a strategy. You have a strategy, but it is by luck. Even these days, these card games and other things, right? Like your lottery tickets, your game of chances, all those things are speculative, but they are not business. They are income from other sources. But if there is something related to this intraday trading, that is, you buy in the morning, you sell in the evening, you deal with currency changes, purchase and sell. So all these things, whatever we discuss, is called as a thing. So speculation is not illegal, but it is a form of gambling. Hitesh, yeah, hedging is a process of minimizing risk on foreign currencies. Speculative and operating by frequency of transactions. Yeah, there is a separate area that you will understand in final, where you try to understand how to actually determine whether a particular transaction could be classified as speculative. So it is based on the volume of transaction, number of transactions. Is that the objective? What is the objective? For example, if my objective is to invest, then it becomes business. If my objective is to invest, then it is capital gain. If my objective is to make profits, buy, sell, then it is something like business. Yeah, Nalini, intraday trading in stock is speculative in nature. Okay. Yeah. I didn't understand clause D in slide 8. So I'll go back to slide 8. Clause D. See, it is also relating to this modification or something, but relating to government business. So there is a government control business in which you have a control. So that is, they are paying to the management of the business. So government is involved in a particular business, partnership with, let's say, another team. The management of that team is being paid for any modification. So the entire clause A to clause C, it is only about termination and modification. In clause D, we are talking about government organization paying to the management of the other person who's involved with the government. So that's what we are calling it as in clause D. It's basically subclause. 2 is clause. This is subclause. A, B, C, D is subclause. Okay, so that's all about speculation business. So we'll move on to the next area. Next area, similar to what we discussed in house property salary and all, we are going to understand the structure of how this operates. So we are going to understand this in sections. So first section that I'm going to talk about is admissible deductions. That is section 30 to 37. What do you mean by admissible? Expenditure that are allowed as a business expenditure. So you can claim this, you can deduct this from your income to arrive at your profits. So that is admissible deduction. Section 40 talks about inadmissible deductions. What do you mean by inadmissible? These are not allowed as deductions. When you're computing your profits from your business, profit and gains from business or profession. So 30 to 37 talks about what are all allowed deductions. 40 talks about what are all not allowed as deductions. 40A. 40A is basically, it is inadmissible, but not always, It is only on certain circumstances. So 40A is also about inadmissible, but not always, It is only in certain circumstances. So what I am meaning, I'm saying not always. So it is not deductible. It is deductible at some times, but in some times it is not deductible. So that's what we are calling as certain circumstances. Next is section 41. 41 is profits chargeable to tax. This is actually called as deemed income. Okay, deemed income. So we'll see that in section 41. So 41 talks about certain transactions where it is actually not covered under section 28, but it is still deemed income. Please understand, it is actually not a transaction discussed in section 28, but it is still an income. So that is section 41. That is why it is called as deemed income. Section 28 is your business or profession, whereas 41 is your deemed income. And finally, section 43B, which is about there are certain expenditure which is allowed only on payment basis, even if you are following accrual system, even if you are following mercantile system. Even if you are following mercantile system, it is allowed only on payment basis. So this expenditure is only allowed on payment basis, even if you are following mercantile system of accounting. So that is 43B. So with this only you get your income. So you take your profits. So basically income, you adjust with all the admissible deductions, inadmissible deductions. Expenses that are allowed only on certain, disallowed on certain circumstances, and deemed income. And then finally you adjust whatever is allowed only on payment basis. Whatever you get, the result is only the income. That is taxable income, taxable under PGBP. So now we are going to see each of the section in detail, right from section 30 to till section 43B. We are going to see it in detail. So can we start with first section? What is the first section we discussed here? Section 30. So what does section 30 says? It talks about rent, rates and taxes, repairs and insurance for buildings. So section 30 is about buildings. When you say building, we will take various scenarios. One is I am running a business. I have rented out a property. One is I am running a business. I have rented out a property. In that rented out property, what happens? In the property that I have rented out, I might be paying rental. I might be meeting out certain repair expenditure. I might even be having insurance, right? This is when I have let out. Sometimes what happens, it might be occupied by myself. Like I am running my own business there. Or so when I am using it for my own business, I will not be paying rental because we said it is not allowed, right? It is not allowed because I cannot pay rental to myself. So in that case, what happens? Whatever is relating to rates, taxes, repairs, and insurance and all is an allowed expenditure. And then you have a separate category of rates and taxes, and finally insurance. So we are going to understand this in 4 forms, right? So what if you are a tenant? What if you are owning the house? What about rates and taxes? What about insurance expenses? So that's what we are actually calling it as 4 categories. Now, the first thing that we are going to talk about is what if you are a tenant? So rent is allowed. Rent is also allowed if the rent is paid by the firm to partner. Rent is paid by the firm to the partner. There is only one thing there. It should be reasonable, not excessive. So we said, right, in certain cases, expenditure are allowed, but in certain circumstances, such expenditure is not allowed. We said 40A, right? 40A. So in 40A, there is a clause which talks about expenditure which will not be completely allowed. Whatever is only the market scenario will be allowed. So it is basically when with related parties. So a partner is a related party to a firm. So when two related parties are entering into a transaction, only to the extent it is reasonable is basically allowed. So what is reasonable? Reasonable is nothing but something like your fair market value. So whatever is the fair market value. If it's rental, whatever is the market value for that particular property is only allowed. Whatever is not excessive is not allowed. Rent and repairs. So what do you mean by repairs? So when you say repairs, it is basically not repairs not being in capital in nature. So when you say repairs, repair is allowed only to the extent it is revenue in nature. So your regular repair expenditure. Today morning a pipe was broken. So I called a plumber and rectified. This is the revenue repair. Now let's say I am building an entire. I am actually building something and completely renovate something. Then it is capital in nature. So basically, repair in revenue nature is an allowed deduction. Repair in capital nature is not an allowed. So repair done by the assessee alone is considered. If the owner is doing something, the owner is actually spending. Let's say my pipe was broken. I called a plumber. Let's say the expenditure is around 1,200. The 1,200 is provided by the owner. In that case, I cannot claim deduction. So only to the extent that I have actually paid. That is the assessee alone, the tenant alone, whatever he has incurred, that alone shall be considered. And levied by foreign government is also okay. I meant to come to that. Okay, we leave that. So the next thing is occupied and owned. So for tenant, what did we say? We said rent is allowed. Any repairs relating to not being capital nature is allowed. But in case of occupied and owned, whatever is the current repair not being capital nature is allowed. When you say current repair, what did we say? The owner should have been incurring, because owner is only occupying the property. If the owner is actually incurring the cost, he can claim it. So whatever is being actually done by the assessee can be claimed in repairs. By other person cannot be claimed. By rates and taxes. So what do you mean by rates and taxes? Municipal tax, land revenue, local rates, water, land revenue, whatever we are paying to the government, statutory fees paid for the property, paid for the land, will be allowed as an expenditure. The only thing is not just domestic, it also includes foreign governments. Taxes. So there is no restriction on what it is about. So when you say rates and taxes, land revenue, local rates and municipal taxes of India, or if it is outside India, that is also allowed. And last one is insurance. When you say insurance, whatever is premium paid for risk against damage or destruction is an allowed expenditure for the building. So if you are insuring the property for damage or destruction, whatever you have paid as insurance premium is allowed. So that's what it is about. And if it is actually part usage, let's say partly you're using it for rental, partly you're actually occupying for the residents, partly for business. In that case, whatever is the proportionate expenses shall be allowed. So proportionate expenses, which is actually attributed by the assessee, only to that extent it is allowed. So if there is a home and the office, only to the proportion the office expenditure, only that must be considered. So that is section 30. Okay, 31 is other than building. So you're calling about machinery, plant and furniture. So for these three things, repair and insurance alone. So here rental charges are not covered. So rental is not covered here. Only repair and insurance. So what is the eligibility? So basically the asset, that is the machinery, plant or furniture, must have been used by the assessee, for the purpose of own business. So for the own business, the asset is being used, the machinery used, the plant is used, the furniture is used. It could be passive user or active user. What do you mean by passive user? Lease. Now, I actually own the property, but I've leased it to someone. So that person is only actually carrying out all the expenditures, whatever it is about. So now he becomes a passive user. He's not the active user. So the active user, passive user could be different. So the active user is the one who's owning and using it. The passive user could be the one who's owning but actually not using it. Someone else is using on his behalf. So when you say usage of that particular asset, it includes both passive and active user. So something like you're leasing only. So you can see that when we're actually discussing about the leasing topic. And then what is claimed? Repair and insurance claim. What type of repair? Same. Current repair only is claimed, and it should not be capital nature. And you must include, there are certain expenditure which will be considered as current repair. What is that? It is renewal or renovation. Renewal or renovation is basically revenue in nature. But if it is complete replacement or reconstruction, then it becomes your capital expenditure. So what is included? Renewal or renovation. What is not included is replacement or reconstruction. So that's what is not allowed under repairs. And then in insurance, as I told you, premium paid can be considered. If premium paid in case of cash system, and will include payable in case of things. So when you say cash system, only in the year of payment you actually claim it. But when it comes to revenue in nature, that is in case of mercantile system of accounting, it can be claimed as a deduction. It can be claimed as a deduction at the accrual basis. So that's what we are actually calling it. So in case of mercantile system, it is allowed as deduction on payable basis. In case of cash system, it is allowed on payment basis. So that's what the difference is. So if someone is following a mercantile system of accounting, once it becomes payable, it is allowed as a deduction. If it is not mercantile system, only when it is paid, it is allowed. So that is the three things that we need to understand: eligibility, repair, and maintenance. So that's with that we complete section 30 and 31. So we are moving to one of the important section, 32. And in 32 also, the weightage or coverage with respect to your intermediate is very simple, straightforward. Probably you will be given the asset saying that it was purchased on so and so date, and you will be given you will have to calculate the depreciation. So it will be a very basic calculation of depreciation. It will not have any complicated procedures. Whatever is complicated in your depreciation chapter will only be available for you in final. So only then you will remember. So that's what it is about. So what does section 32 says? Section 32 says allow depreciation. Why should you allow depreciation? Why should you allow depreciation? You should allow depreciation for diminution or exertion in the value of certain capital assets. So there is a capital asset which is basically the value is diminishing, or it is completely worn off. It is no more usable at all. So for such capital asset, you provide depreciation. So it is compulsory. So you cannot say, I don't want to provide depreciation. It is compulsory in income tax. You may not have provided in accounting, but in income tax, it is compulsory. So it is mandatory. It is mandatory to basically what do you call it? It is mandatory to provide depreciation under Income Tax Act. So, but there are three basic conditions. First is it must be a specified asset. That is because there is an asset listed in your topic. So whatever asset is being listed in the depreciation table, only that is eligible as an asset. And then you have used for the purpose of business or profession. So that asset must actually be used for the business or profession. And finally, it could be owned by the assessee, or it could be owned fully or partly. What do you do if it is partly? Only that proportion will be accounted, and only for that proportion you provide depreciation. So that is what we are calling it as owned wholly or partly by the assessee. So these are the three situations. One is specified asset, another is it is used for the purpose of business or profession, and third is it is actually owned wholly or partly by the assessee. So now we said there are specified assets. There are assets only for that asset which has been listed. You will have to provide depreciation. You need not provide it for all the assets. The first we are going to discuss about is tangible asset. So what is tangible asset? Building, machinery, plant, furniture. Broadly, if you wanted to classify all these, it is building, machinery, plant, and furniture. What is intangible? Intangible is basically includes know-how, patents, copyright, trademark, license, franchisee, or any other business or commercial rights of similar nature. So it's basically any other business or commercial rights of similar nature is what is important. So there was an amendment in Finance Act 2021. They removed goodwill of a business or profession from this list of any other transaction, that is any other business or commercial rights of similar nature. So that's what it is about. So what are we saying? We are saying no patent, copyright, trademark. Apart from that one miscellaneous clause, what are we saying? It is not, that is the commercial right that you're talking about is not in the nature of goodwill, not in the nature of goodwill of business or profession. So that's what it is intangible is about. Certain things that we need to understand is basically buildings. So we said tangible assets, right? So we need to understand what is building. Building only refers to the superstructure, built over the land. So it does not include land. So when you say building, it only includes the building value. It does not include the land value. Land is a separate asset. Why? Because there is no depreciation. On the land in which building is erected. So land does not have any depreciation. So it is only the building that is undergoing depreciation. And then plant. The term plant is specifically defined in section 43, clause 3. However, we'll cover it here itself. What does it say? It says it includes ships, vehicle, books, scientific apparatus, and surgical equipment, but does not include tea business, livestock, building, or furniture. So typically what they are saying is the term plant includes these all: ship, vehicle, books, apparatus, and surgical equipment, but does not include the tea business, livestock, building, or furniture and fitting. So this is what is not included. Why is building not included? Because building is separately classified in the topic building itself. Similarly, why is not furniture included? Furniture is also typically classified separately here, furniture separately here. So that is why it is not. So we are only discussing about this word plant and machinery. So the plant has been defined independently. So that's how we need to consider as a tangible asset. And this concept of plant is not applicable for animal. So none of the animal are actually called as asset. And then none of the asset, human body asset. So none of the human body asset is also not called as plant. And similarly, stock, we have already discussed in plenty. Animal, human body, and stock are not diminution asset. So whatever we are calling it as is not an asset. It's not a plant. You should not say it's not an asset. It's actually not a plant. So that's what it is about. So we covered what is tangible. We discussed what is building. We discussed what is plant. And we said furniture is already included there. That's why it has not been separately classified. Similarly, for intangible, it is no patent, copyright, trademark, license fee, and all those things. Any other business or commercial activity was already there. In Finance Act 2021, there is a new thing that is added, which says that if it is not being goodwill of business or profession. So basically, any goodwill is not an intangible from Finance Act 2021. So that's about section first category, which is called as specified assets. So certain assets on which depreciation is calculated. Next is how exactly should the asset be used? We said usage of assets, right? So that's the one thing that we need to understand. So the asset must be put to use. The asset must be put to use at any time during the year. So once you have purchased, it must actually be put to use. You cannot just buy the asset. It must be put to use only then it is eligible for depreciation. The amount of depreciation allowance is not proportionate to the period of use during the previous year. Why is that so? Because if you have actually, we said for 180 days, the first 180 days, it's a different scenario. The post 180 days is a separate scenario. So now what does it say? It says period of use during the previous year. So if you're actually using it for 40 days, you don't provide depreciation for 40 days. You provide depreciation for 180 days. So the only two scenarios that is available is 180, 360. This is whole year. This is here. This is half year. So whenever you are making a purchase of an asset, if you're holding it for a very less period, then if it is less than 180 days, it becomes even though it is less number of days, it should still be calculated for 180 days. So that's the one of the thing. So basically, the proportionate is not applicable in depreciation under the Income Tax Act. So the depreciation is either less than 180 days at 50%, more than 180 days is for the whole year. And what is actually not taxable thing? The asset has actually worked. The asset has actually worked by another person or utilized by another person. That is lessee or licensee. So if the lessor feels, that is the owner of the asset feels, it is actually being used by other person. In that case, the asset shall be liable to depreciation even if it is actually not used by the asset. Why? Because it's a passive use. He is not actually using it, but he has let out the car. Let's say he has let out the asset. He has let out the asset to another person on lease basis, so as a lessor and lessee. So that is also applicable even if he is not used. And then finally, passive user, ready for use. Example, standby equipment, machinery, spare whose usage is irregular or cannot be measured, determined. So what you are saying is, be it passive user or ready for use, it could be a standby equipment. It's actually not the equipment, but if one machinery fails, you use the other machinery. So till that machinery goes on failure, the other machinery will be idle. So they say depreciation should be calculated for that also. So whenever it cannot be reasonably determined. So whenever the asset, whatever is being needs to be depreciated, what they are saying is, if it is passive use, it is used by someone else, you need not provide depreciation. That is, the real owner need not provide depreciation. The last one is computation. Depreciation computed as follows. So you'll have straight line method, you'll have WDV method. But when it comes to straight line method, it is only applicable for power generation unit. Power generation unit who can opt in the first year itself. They cannot change it subsequently. So whatever is the straight line method will be considered for power generation unit. But still, in first year, they have an option to choose WDV also, only in the first year before operation commences. And then you have written down value method. Any block of assets on such percentage may be prescribed. So if it is written down value, if you're going to sell it because of written down value, then the provision says you might have a percentage in mind. If it falls below this, then it will be treated as discarded asset. So that is WDV. And then you have power generation units can open WDV for the first year of experience before the date of filing return, which income final and no more changes allowed. So typically you can change till the return filing date. Moment you have changed, the first year of operation. So let's say the due date of filing is 30th September. You have time till that date, 30th September. But moment you have decided and paid, please, whatever is there, that is final and no more changes allowed. So once you have decided, there is no changes. Second year, you cannot say, I will opt for WDV. Third year, you cannot say, I'll opt for W. Once you have opted for SLM, it is SLM across the period. So final and no more changes allowed. And on additions during the year, as we said, if it is less than 180 days, we charge 50%. If it is more than 180 days, you charge the whole thing. Okay. We'll stop this with one more slide, basically. So typically, whatever you are seeing now as regular depreciation, there is also a concept of this additional depreciation. So additional depreciation is applicable to a person who has purchased new machinery or plant, was acquired and installed after 1st April 2005. Very long period, right? 2005. So acquired and installed on or after 1st April 2005, but it is not applicable for ships and aircraft. So additional depreciation is not allowed for them. And they're engaged in the business of manufacture or production of any article or thing. So they might be in the process of manufacturing or production. So no trading is not allowed. And when you say manufacturing, a circular was issued to say that printing or publishing is also manufacturing or production. So the industry, if they are into printing or publishing, they are also allowed. Generation or transmission of distribution of power. So they're either engaged in the business of manufacturing or production of any article or thing, or in the business of generation or transmission or distribution of power. So that is the only businesses for which this additional depreciation is allowed. And how much is additional depreciation? 20% in actual cost of such machinery or plant. It is only applicable for machinery or plant, correct? So it is applicable at 20%. In case the new asset was purchased less than 180 days, you claim 10% this year, 10% the next year. So that's what it is about. So what are the additional things that you must understand? The provision is not applicable. That is, the provision is not applicable on any machinery or plant. So the used asset, it should not be a used asset or outside India. It should not be used asset in or outside India. So it cannot be a second-hand asset. And similarly, it should not be for any office premises or residential accommodation. So for guest house or any residential accommodation, the asset, whatever is being purchased, should not be installed in any office premises. And then you have 100% of the actual cost. 100% of the actual cost allowed as deduction, whether by depreciation or otherwise. So similar to your 35 AD, what did we say? 100% would have already been provided as deduction. In that case, you cannot claim any additional depreciation. So for such asset also, you cannot claim depreciation. Any office appliances or road transport vehicles. So not just your office premises, anything related to your office appliances or road transport vehicles, it is not allowed. So these are the assets for which it is not eligible. Second-hand assets installed in office premises or residential building or guest accommodation, and then any office appliances or road transport vehicle, assets which have already claimed 100% deduction. So for that is also not allowed. For these assets, additional depreciation is not allowed. Now we are coming to rates, the depreciation rates. We are not going to go through every one. We are only going to cover whatever is relevant. So the block, the first category is your buildings. You have block 1, 2, and 4. So 1, 2, and 4. Residential is block 1. Non-residential is block 2. Water supply and wood structure is the next thing. So these are the depreciation rates, 5, 10, and 40. So if it is a residential building, it is 5%. If it is not residential, it is 10%. So you must have to remember the key depreciation rates for key assets: plant and machinery, motor car, computer, software, building. So these things you need to understand. That's what we have covered in this particular slide. And then electrical fitting, that is furniture and fittings, it is 10%. Plant and machinery. Motor car not on hire has 2 clauses. Motor car on hire has 2 clauses. So if it is relating to a period between 23rd August 19 and 31st March 2020, they get 2x. Instead of 15%, 2x, they get 30%. If it is on hire, they get 1.5x. So instead of 30, it is 45%. So aeroplanes and aero engines is 40. Computers including software is 40. Sorry. Any other plant and machinery is 15%. So these are all tangible assets. The next category is intangible assets. So what do you mean by intangible assets? Whatever we have seen earlier, only thing is if it is any other business, commercial rights, similar nature, it cannot be goodwill of business or profession. So from Finance Act 2021, goodwill of business or profession has been removed from this intangible for the purpose of business or profession. So any other business or commercial right of similar nature other than not being goodwill is what is considered. It is straight away 25%. Please remember the method is SLM for power, WDV for others. So for power also, in first year, can opt WDV forever. So it's not like first year, second year and all. If they have opted WDV, it is forever. So otherwise, it is only SLM for power generation units, WDV for everyone else. No exception to this. For everyone, it is WDV, but for this generation distribution of power. Okay. So this is a problem. I'll just briefly explain you. So the opening balance is 30 lakhs. Opening balance is 30. And then you have new plant and machinery, 20 and 8. So if you actually see, computer and office premises is 3 lakhs. So you have plant and machinery and computer, correct? So you have 2 categories. In plant and machinery, opening is 30, 28. So total is 58. For this, it is only new. That is 3 lakhs, correct? So you have only this computer. For this, you have 3 lakhs. Now, if you actually look at it, for computer, it is 40%. For other plant and machinery, it is 15%. So all these 28, it is eligible for 15%. We need to see whether they are eligible for a whole year or only 50%. Both are on 8th June 2021, 15th June 2021. So they're eligible for whole year depreciation. Whereas for computer, they have installed only on January 2022. So it is only 50%. It's only 50% is eligible. So that's what the depreciation is all about, correct? Now, additional depreciation. For computer, additional depreciation is not allowed. For these two, it is allowed because it is a new plant and machinery and it is put to use also. So additional depreciation is allowed for both thing. Since it has been used for more than 180 days, the entire additional depreciation, that is 20%, can be claimed in this year itself. So that's what it is about. So for 30, you claim whole year depreciation. For 20, you claim whole year depreciation plus additional depreciation. For 8 lakhs also, you claim whole year depreciation plus additional depreciation. And for 3 lakhs, there is no additional depreciation. There is only this new asset depreciation for this particular thing. So that's what this illustration is about. So with this, we'll wind up the session. I'll just see if there are any questions to answer you all. Mansha, deemed income same as given house property? No. That deemed income is you are receiving your unrealized rent later point in time. Here you have multiple deemed income. There are various clauses there. So probably we'll see that when you are seeing section 41 itself. Renovation or renewal is same as reconstruction. See, renovation is small thing has gone bad. You're renovating. So it's not like you're building in the overall thing. Let's say there's water leakage in the all the pipeline. You're just renovating this. So it's a wholesome activity, but it's not a complete activity. When you're saying reconstruction, let's say you're completely demolishing everything and completely reconstructing. So it is a plus one activity. So renovation plus one is reconstruction. Cost of repair and current repair mean. Cost of repair is if you are calling a plumber and paying him 1,200, that is your cost of repair. Current repair is whatever repair related to current year, current period only should be claimed. If you have spent a couple of years ago, that and all cannot be claimed. Whatever you are actually paying for the current year repair, that only should be considered. Okay, I think I did not talk about that. In building, what all building includes? Building includes bridges, culverts, wells, and tube wells. Roads also. So typically building, we all know building. In building, road and bridges is also covered. This culvert, wells, and tube well are all water passages. Culvert is also water passage. So all that is also building. Mansha, senior advocate Shanti Bhushan claimed his heart as planned and High Court rejected his claim. All case laws are only applicable in final, so please need not spend time on knowing the case laws. I'm happy that you have understood the case law and you know the case law, but for rest of them, case laws are not in your intermediate level, it is only in final. So anyways, that was an interesting thing, issue, but since it is not relevant to your syllabus, I'm not covering it right now. But yes, Mansha, in that case, the court rejected the claim saying that heart is not a plant. Mukta, yeah. In accounts, it is proportionate. If you're using it for 3 months, you provide depreciation only for 3 months. But in income tax, if you're providing for 3 months, you provide half the year depreciation, 6 month depreciation. So there are only 2 depreciation, 6 months, full year. There is nothing other than that. What do you mean by Kaveri? What do you mean by an asset exclusively used for the business operation? So typically, the asset that you have purchased should be for the purpose of carrying out the business activity. So that is what you're carrying out, exclusively used for the business. But sometimes you buy an extra asset. One machinery is there, you buy an additional machinery. If one machinery goes bad, you use the other machinery for a temporary period, right? So that is what you're calling as not used exclusively for the purpose of business. So when you say not used, we are talking about ready for use. even assets that are ready for use can be considered for depreciation. Pooja, is there any specific reason for restricting power generation units alone for choice of depreciation method? No specific method, no specific reason. Basically, the power generation unit is very huge investment, right? It's, so much of investment is made for electricity related investment. So there is that option given to them to choose to minimize their losses, because depreciation, higher depreciation in the earlier year will give you heavy losses. So they started using the straight line method so that uniformly distributing their depreciation. Otherwise, there is no specific reason as such. It is only the benefit is only given for the power generation unit. Why are we taking depreciation for the whole year? I don't understand the question. If it is related to this illustration, these two, it is more than 180 days. Used to more than 180 days. This only is less than 180 days. So for this, you provide half depreciation. That is 50% depreciation. So I'm not calculating any numbers here. I'm just saying it. Mohammed, what about assets sold during the year? We'll see that in the next class. Mukta, when to apply accounts rule, when to apply IT rule. Generally, what happens is, let's take companies for example. There is Companies Act, they have given you a depreciation rate. So companies, for accounting purposes, will follow depreciation rate provided under Companies Act. While computing your income under Income Tax Act, you will disallow. You will not consider the depreciation. You will consider the depreciation under the Income Tax Act. So for income tax purposes, it is only income tax depreciation. So it is for companies, they don't have an option. They will follow Companies Act depreciation in accounting and IT depreciation under Income Tax Act. For others, to avoid confusion, they can always follow IT depreciation in accounts also. It is okay. Nothing wrong about it. Only in companies, there are clear depreciation rates provided. So you don't have an option. You will have to follow that. So, right, I guess I've covered everything, the queries also. So with that, I'll wind up for the day. We'll see in the next class. So thank you for the wonderful session. Thank you very much. Yeah, concluded.